Sorry, everyone. Hey, good morning, everyone. Sorry about that. How's everyone doing? I hope here right now can hear the sound. Good. Thank you. Thank you. I hope you all started the day off with a nice breakfast and a cup of fresh coffee. My name is Jeff from Equities, and here's Mr. Kamal Mustaza from our Value Partners, who will be your trainer of the topic today. Mr. Kamal Mustaza has a vast experience in the fund investment industry, and he specialized in equity portfolio management. He was previously an investment manager at the Social Security Organization who had experience in leading foreign equity teams. He joined Great Eastern Life Assurance Malaysia for a while, and he was also a fund manager in the Permodalan Nasional Berhad. Without further ado, let's all welcome Mr. Kamal Mustaza. Hi, Mr. Kamal.
Hi, Jeff. Hello, can you hear me?
The mic is yours.
All right. Okay. Thank you, Jeff, for the very kind introduction. So I think before I start, let me try to share my screen first. So can everyone see the presentation? All right. Okay, that's good. Awesome. So thank you again, Jeff, for the very kind introduction. And I think to every participants, thank you for tuning in for this webinar. I mean, I know it's a Saturday and then you have to wake up early for this webinar, so I really appreciate it. So I think before I start, just a bit of disclaimer. Please note that all materials used in this webinar is for educational purpose only and should not be construed or used as an investment advice. If you need investment advice, please seek your trusted licensed investment advisor. Yeah. So before I move further, a bit of introduction about our company, Value Partners. It is one of Asia's most established asset managers with AUM of 10 billion US dollars across various asset classes, including equities, fixed income, alternative, multi-asset portfolios, as well as quantitative investment solution, which includes ETF. Our investment approach is fundamentally driven with the core principles of value investing came into the picture. The company is headquartered in Hong Kong with offices in Shanghai, Shenzhen, KL, Singapore, London, and representative office in Beijing to provide localized research and client servicing. So do follow us on our social media, on Twitter, on Facebook, as well as on LinkedIn, just to get more insights. All right. So when it comes to investing, the typical conundrum begins with if you are given an X amount of money, how do you then proceed to invest that particular money. So usually the available options for us are the mutual funds or unit trust fund, as well as individual stock and shares, or even ETF. So between these three options, what will you choose? So before we make a comparison between those three options, let's try to define ETF first for those of you who are not familiar with it. So an ETF is basically a basket of securities wrapped as a single financial product that can be bought and sold on a stock exchange. So from that definition itself, ETF is essentially a hybrid between unit trust fund and shares, where similar to unit trust, ETF consists of a basket of stocks within its portfolio, and similar to shares, it is also can be traded via stock exchange. So normally when you're buying an ETF, in the case of a plain vanilla ETF, you are essentially buying a portfolio of different stocks, just like when you're buying into a unit trust fund lah. So what are the key differences between ETF, unit trust, as well as the individual stocks? So in the case of investors who prefer to buy individual stocks directly, there is definitely no management fee, as you basically will be the one who manage your own portfolio. And at the same time, it gives you the flexibility and full discretion to choose what type of stocks to buy or sell, when to actually buy and sell, and how much do you want to buy or sell. But probably on the downside a bit, in order for you to achieve meaningful diversification benefits, it requires a very large capital. So if you want to have a portfolio of about 20 to 30 stocks, taking into account the trading costs and other expenses as well, you will need a large capital to invest on your own. And not to mention, managing your own portfolio requires considerable time, as well as the right knowledge, which may not be suitable for everyone. On the other hand, if you choose the unit trust fund route, I mean, you know that the fund will be actively managed by investment professionals. But this will come at a cost of higher fund expenses, coming from both the higher management fee as well as the trading cost due to the higher portfolio turnover. Of course, unit trust fund will strive to outperform the benchmark. So for example, let's say the benchmark being used is the FBMK LCI. And let's say in that particular year, the FBMK LCI generate a return of 5%. So the fund will then aim to deliver more than 5%. So let's say the fund delivers 6%. So the 6% against the 5% of the benchmark. So that means in terms of the relative outperformance, the fund outperformed the benchmark by about 1%. So that's the key idea for the UTF. But there is a risk that the unit trust fund might not be able to deliver the outperformance, but instead generate a return much lower than the benchmark itself, or in some cases even generate negative return for that particular year. So this is the risk that investors should really watch and be mindful of. Then you have like ETF somewhere in between these two. Generally, it is passively managed, meaning it will closely track the benchmark. Hence, the return of an ETF will somewhat be very similar to the return of the benchmark. So you don't really have to worry about the risk of significant underperformance, which may exist at times in the unit trust fund space. At the same time, it is transparent, and you get portfolio diversification through the market exposure, and not to mention, because it is passively managed, it has very lower turnover, hence resulted in a lower fund expense compared to the actively managed unit trust fund. So like I said before, ETF is essentially a hybrid between the shares as well as the unit trust fund. So in terms of the similarity to the individual stocks, like I said, ETF is traded on the stock exchange, and it can be traded during the market hours. So in terms of the minimum trading unit, it's one lot, which means 100 minimum 100 shares. And the fact that the indicative NAVs and real-time prices are available to the investors. But also similarly to the unit trust fund, it is basically a basket of a portfolio of stocks, of which it is an open-ended fund scheme, and it tracks or follows a benchmark or index as a comparison. So how does ETF really works? Generally, ETF seeks to track the performance of the underlying index or benchmark. For example, here we use the FBMK LCI. So we know that within the FBMK LCI itself, there are about 30 constituents within the index, each with their own individual weights. So what it means is that the larger the size or the market capitalization of the company, the larger their weight is on the index itself lah. So I think for example in this slide we can see that probably Public Bank is the highest, followed by Maybank and TNB. I think this is based on the float adjusted market cap lah. So an ETF that actually try to track the FBMK-LCI will then try to replicate the composition of the index by investing in each of these individual 30 components in a similar manner, meaning that they will try to mimic the weights of the actual constituent within the ETF portfolio. So if the FBMK-LCI, I mean the weight of Public Bank is about 10.5%, then the portfolio of the ETF itself will try to follow that 10.5% weights within the ETF portfolio lah. Thus, this brings the best of both world of stocks and index fund to the investors. So key advantages of ETF, first and foremost, is that it is very transparent. Basically, what you see is what you get. Compared to unit trust fund, investors are able to get full transparency on a very frequent basis. In this case, on a daily basis, in terms of the ETF constituent, the performance versus benchmark, as well as cost on a daily basis lah. So let's say if the ETF invests in 100 companies, so if you go to the ETF issue website or even the Bursa's website, you can actually see the 100 names that are invested by the ETF, along with the weights of the each of these individual companies lah. At the same time, ETF also offers ample source of liquidity, coming not just from the secondary market or the exchange trading volume, but also the off-market transaction, as well as the underlying liquidity from the primary market, which I will touch a bit later on. Third is basically diversification. As I said earlier, ETF consists of a basket or portfolio of securities, meaning with one single ETF trade, you will get an immediate exposure to multiple securities, gaining the diversification benefit with just one single trade. Sorry. Sorry. And also in terms of the cost effectiveness of ETF, because it is passively managed, ETF has lower management fee versus actively managed unit trust fund. And last but not least is ETF do offers flexibility and accessibility, as it can be traded throughout the day during the market hours. Just to expand a little bit further on the diversification part, there's a lot of academic literature that actually conclude that between 90 to 95% of the variation of return in the portfolio is driven by asset allocation alone, and whereas only about 5 to 10% are coming from both individual stock selection as well as market timing. So what does this mean is that the asset allocation or an exposure to a particular market will drive a big chunk of the performance of the portfolio. And this is where ETF actually fits the bill, as it offers investors an immediate exposure to the market. So, just to give the idea, basically when you buy an ETF, you are basically buying the market itself. So if the ETF is tracking the FBMK-LCI, then you buy that particular ETF. So you are basically buying the FBMK-LCI, which is basically the market lah. At the same time, as ETF comprised of the portfolio multiple of securities, any idiosyncratic or non-systematic risks are virtually eliminated from investor portfolio, enable investors to achieve diversification benefit with just a single product. And lastly, ETF also provide ease of access to foreign investment. As you will see later in the presentation, there are a number of ETF in Malaysia that is listed and traded on Bursa with ringgit trading currency that offers foreign underlying asset. So this type of ETF actually allows immediate and hassle-free process for investors to get foreign market exposure, meaning you don't really need to open up foreign trading account or even foreign currency account, but instead use your local brokerage account to get foreign market exposure just using the ringgit as the trading currency. Here is just to elaborate further on efficiency of ETF, both in terms of cost as well as process. So buying an ETF is essentially similar to buying an individual stocks, where investors are subjected to a brokerage fee of 5%, 5 bips or minimum RM 8 ringgit, along with Bursa clearing fee of 3 bips. This means that if you invest 1,000 ringgit in an ETF, you will be charged about 8 ringgit 30 cent in fees, meaning your effective net investment amount is about 991 ringgit 70 cents. Now we look at the unit trust fund. There is another fees on top of that, which is the usual sales charge of up to 5%. This means that if you invest 1,000 ringgit, then a sales charge of 47 ringgit and 62 cents will be deducted, leaving your net investment amount of 952 ringgit and 38 cents. Similarly, I mean, this is before your money is being invested lah. Similarly, when it comes to the management fee, ETF usually is much cheaper than the unit trust fund. Again, because it is passively managed, of which UTF management fee can charge up to 1.8% per annum versus ETF of usually up to 0.6% per annum of the fund's NAV. In terms of process for UTF on subscription, the transacted NAV per unit will usually be known within 2 days, while for redemption, proceeds will be written within 10 days. From here, you can see that there's a lag of knowing your actual transacted NAV per unit from subscriptions and getting the proceed from the redemptions. Meanwhile, for ETF, the settlement cycle follows Bursa settlement cycle of T+2. But you would usually already know the exact amount you use to purchase or the proceeds you get from the sale of ETF normally by the end of the trading day itself. So this is basically in terms of the efficiency comparison between ETF and unit trust. So now let's talk a bit about the ETF landscape. Compared to the overall history of the market, ETF is still relatively new. With the first ETF listed was SPDR S&P 500 Trust ETF, which was launched in 1993, which seeks to replicate the performance of S&P 500. It actually took a while for ETF to actually find its footing and gain traction among investors before other new products are launched. So by the early 2000s, we saw that ETF expand beyond the traditional equity asset classes with the launch of the first bond ETF in 2002, followed by other type of ETF, namely ESG, Smart Beta, and the commodity ETF. So leading up to the global financial crisis in 2008, we saw more exotic or alternative exchange-traded products being launched, like the exchange-traded note, as well as the leverage and inverse ETF in 2006, followed by Sharia, active, and volatility ETF. Even now, we continue to see innovation in the ETF space, with the first crypto ETF was launched in Canada early last year. Right now, based on data from Bloomberg as of July last year, the AUM of the total ETF stood at about $9.5 trillion and counting, and this amount is almost double the size of ETF market in 2018. And this is particularly driven by the new issuance and continuous innovative products. So over in Malaysia, we have about 19 ETF currently being listed across different asset classes like bond, equity, as well as commodity. And in terms of the geographic focus, it ranges from the domestic only, which is Malaysia, to regional or even a single country. Out of the 19 ETF, there's about 6 ETF that is Sharia compliant, of which the ETF from Value Partners, which is called the VPDJ Sharia China A-Shares 100 ETF, is also one of the Sharia compliant ETF available out there. Despite despite just the 19 ETF currently listed, we believe there is room for growth in the local ETF space, especially in the Sharia space lah. So due to the unique open-ended structure of an ETF, it has dual existence in the marketplace. ETF exists in both what is known as the primary market, that is normally driven by the primary ETF creation and redemption by large investors, predominantly institutional investors, as well as in the secondary market, where all types of investors, most commonly individual or retail investors, buy and sell them. So basically, the secondary market is where you buy, where the retail investors is buying the ETF lah, which is through the Bursa Exchange. So before ETF can be traded on the stocks exchange, ETF are created through the interaction of participants in the primary market, namely the participating dealer and ETF issuer. So the primary market is also the one that will drive the size of an ETF, as ETF can be continuously created and redeemed based on investors' demand. So once ETF is created, the ETF can then be bought and sold on the secondary market, which is again the stock exchange at the prevailing market price. So like I said earlier, I think because of the existence of the dual market, the primary and secondary market, so when it comes to the secondary market, which is the exchange, it's similar to when you buy or sell individual shares. It is based on the prevailing market price, which is determined by the market demand and supply. Whereas if we take an example of the unit trust fund, it is based on the NAV per unit. So the beauty of ETF itself is because it exists in the dual market, both price and NAV per unit do coexist as a way to actually provide a check and balance, of which the market price of an ETF should and will always be guided by the NAV per unit of that said ETF, because we actually see NAV as the true value of the ETF. So in this chart, you can see that at times there will be discrepancy between these two, meaning at times there can be an instance where the price of an ETF is traded higher than the NAV per unit, meaning that the price is at a premium to the NAV and vice versa. What does this mean is that if investors are bullish on the ETF, higher demand may push the price above the NAV and vice versa. But over time, this discrepancy should be corrected, especially due to the market forces lah. And then when it comes, when we talk about ETF, there is a common misconception that ETF is not liquid. This is basically based on what you see on the trading volume that is seen on the screen lah. This is actually, this statement is quite misleading, as the on-screen volume does not equate to the overall liquidity of an ETF, as there is often significantly deeper markets than what you can see on the bid-ask spread. It is important to note that when it comes to ETF, there are three markets that drive the ETF liquidity, namely the underlying liquidity and hidden liquidity. With on-screen liquidity is just a small fraction of the true picture of the ETF liquidity. So let's say if you see the on-screen liquidity is very low, any investors that want to buy more than what the exchange, the market can offer, can go directly to the market makers, or even go straight to the ETF issuer via the participating dealer to create more units of ETF. So this is where we said that there's ample liquidity on ETF lah. So ETF can benefit a wide range of investors, ranging from the newbie who does not have much investing experience, even to the most sophisticated investment professionals. So Warren Buffett, who is the oracle of Omaha and the father of value investing, once said that it is better for most people to buy an index fund, meaning that you should just buy the market rather than trying to outperform it. An ETF, which usually tracks broad market benchmark, is in a way, is a good way to actually do that lah. So this is just to show that if you really like do-it-yourself stuff, if you can assemble your own furniture, then you can also construct your own portfolio using ETF lah, which I will explain a bit detail later. But before that, allow me to actually just give you some brief overview of our own ETF, which is the VPDJ Shariah China A-Shares 100 ETF. So the VPDJ Sharia China A-Shares 100 ETF was actually developed based on a three-pronged approach, of which the main geographic focus is on China, because this is where we believe that we like to actually tap on the growth of China, especially in this coming decade. And at the same time, we would also like to leverage on Value Partners' expertise, which has been in the market since the early 90s. At the same time, we do know that A-shares as asset classes is very underrepresented in global portfolios. And when it comes to the thematic consideration, we added the Sharia overlay into it, because this first is to provide access to all group of investors, meaning both the Sharia focused investors as well as the conventional investors can actually buy this same product. But at the same time, because of the nature of the Sharia screening process itself, the resulting constituent or the resulting portfolio actually focuses more on the new economic sectors. So value, our product is basically the first of its kind. It was launched on the 12th of July 2021 and subsequently listed on the main market of Bursa Malaysia on the 28th of July 2021 under the Bursa stock code 0838EA. I'm sorry about that. And Bloomberg ticker CH100RMMK equity. It is benchmarked against Dow Jones Islamic Market China A-Shares 100. And it is a passively managed ETF using a full replication methodology. So just an overview of the NAV per unit as of 28 February. It stood at about 1.7271. So if you want to go buying this ETF on the primary market, the minimum block size is about 2 million units. And in terms of the secondary market, like I said, it's similar to buying shares. The minimum lot size is one lot, which is 100 units. The trading currency is ringgit. Looking at the average daily volume traded since inception is about 48,000 units. And in terms of the closing market price as at 28 February is about 1 ringgit 72 cents. So when it comes to the participating dealer in the primary market and the market maker in the secondary market, we actually approach Kenanga and M+ to actually help us with that. So when we talk about investing in China, there's a whole range of different asset or share classes that we can talk about. Sorry. Generally, investors are more familiar with the H-shares or even the red chips traded in the Hong Kong Stock Exchange, or even the American Depository Receipts or the ADR that traded in the US. And this, the one traded in the Hong Kong and the US are categorized as the China offshore markets. Historically, China A-shares were only available for purchase by mainland citizens due to China's restriction on foreign investments, but this has since changed over time. Chinese authorities have been highly active in liberalizing their onshore markets, particularly in the last five years. The initiative include starting the Stock Connect program, removing the quota limits for the QFII, as well as implementing new laws to enhance corporate disclosure requirements as well as investor protection. So if you look at the bottom left chart there, you can see that compared to ADR, which has about 158 companies with a total market cap of about $2.2 trillion, or even the H-shares, which has about 285 companies with a combined market cap of $900 billion, we can see that A-shares alone has about 4,000 companies with a combined market cap of about $12 trillion. So you can see the bigger opportunity set for investors to choose from. And even since the start of the Stock Connect program, we can towards the end of 2014, we can see that there's a continuous inflow from investors buying into A-shares over the years. So despite, I think we can see that, I think starting early last year, there's a bit of challenges in the near term for the China market. We do believe that the China structural growth story remain intact. China, in terms of the GDP, it is on track to become the world's largest economy. China has come a long way since the 70s to become the second largest economy in the world, just behind US currently. So within the next decade, the race for the top spot is actually within China's reach. At a projected of 4.5% to 5.5% annual growth in the next decade, China's GDP is set to surpass US sometime between 2030 to 2035. And despite being the second largest stock market globally, A-shares is still underrepresented in global portfolio, with A-shares represent less than 0.22% in global equity fund holdings. At the same time, if you look at the metrics on the right there, A-shares actually exhibit low correlation against other major market at about between 0.4 to 0.5. And we know that any assets with a very low correlation is generally a good addition to investors' portfolio. So if we combine the structural growth story of China with the mismatch of the size, mismatch between the size of China onshore markets, again, the current level of fund holdings, together with the low correlation of the A-shares market itself, we truly believe that A-shares as an asset class do provide potentially compelling investment opportunities for investors due to the diversification benefit, as well as room for first mover advantage to the investors. So now we take a deeper look in the underlying index in further detail. So our ETF actually track the benchmark known as the Dow Jones Islamic Market China A100. As I mentioned before, it is a Sharia ETF. So I mean, likewise, the benchmark itself is Sharia index. And as such, there will be Sharia screening applied for the index comprising both the qualitative and the quantitative part. So it is a negative screening methodology, meaning stocks that fail either the qualitative part or the quantitative part are excluded from the index. Sorry. For Dow Jones, specifically on the qualitative part, stock that engage in business of selling alcohol, tobacco, pork-related products, conventional financial services, weapons, and defense, as well as entertainment, are excluded from the index. For the quantitative part, companies that have high level of debt, cash and account receivables to market cap are also excluded from the index. Next, when it comes to the index membership, it will come from the broader Dow Jones Islamic Market China A Index, and the constituent must be traded via Stock Connect. So special treatment stocks, which are stocks that have issues of going concerns or faced with the risk of delisting, are excluded. This is to ensure that the index comprised of a fundamentally sound and liquid companies lah. So this special treatment stock is somewhat similar to, I mean, when it comes to Malaysia, is the PN17 companies lah. So for this index, we actually exclude all these PN17 companies to ensure that I mean, to minimize actually the risk for both the investors as well as the ETF issuer. So the index are based on the float adjusted market cap, and it will be rebalanced every quarter. So then you might ask, I mean, why choose the Dow Jones instead of the MSCI or even FTSE? So when it comes to the product ideation, or when we actually try to develop the product, we take into consideration multiple factors to ensure the robustness of the underlying index. So based on the comparison we made with MSCI and FTSE, you can see that the DJIM China A100 actually managed to outperform its peers. And I think we believe this outperformance can be explained by the different methodology used by each index providers. So as I said earlier, there's two parts of the screening, the qualitative and the quantitative screening. So usually qualitative is somewhat similar between different indices. It's basically you cannot buy the conventional financial services, cannot buy alcohol, cannot buy tobacco, cannot buy pork related businesses. But when it comes to the quantitative part, I think the stark difference is basically on the denominator being used in calculating the ratio. So we have the debt ratio, we have the cash ratio, we have the account receivable ratio. So for DJIM, the denominator being used is the market cap, whereas for the MSCI and FTSE, the denominator being used is total assets. So what we found out that, especially true, especially for the past 2 years, is that total asset base index actually discriminates against tech and service sectors, which operates normally on a very asset-light business model. And this is the key reason why this total asset-based index, such as MSCI and FTSE, actually underperformed the market cap-based index in recent years. And also, when we talk about China A shares itself, like I mentioned earlier, there's a different types of China share classes available for investors to pick and choose from. So looking at A shares itself, it is, we know that the past 2 years, the past 1 year since early 2021 has been quite challenging to the China market. But when it comes to the A shares, and particularly the Sharia A shares, it has been less susceptible to the challenging environment compared to other China share classes. So you can see that the Sharia A shares actually are the most resilient compared to other China share classes. So now we take a closer look at the DJIM China 800 index versus the conventional sibling, which is the CSI 300. So based on the data, we can actually deduce that DJIM China 800 is actually a good proxy to CSI 300, with the correlation of 0.89 and beta very close to 1. And looking at the looking at 1 year, 3 year, and 5 year performance, DJIM China 800 managed to outperform the CSI 300 in all the three periods mentioned there. And now we take a closer look at the top 10 stocks and sector composition between DJIM China 800 against the CSI 300. So due to the function of Sharia screening, DJIM China 800 virtually have no exposure in the financials and real estate sectors. We know that both financial and real estate sectors in CSI 300 index, along with the high leverage state-owned enterprise, were the main drivers of China's old economy that we've seen in the early 2000s. So with the absence of financials and less focus on SOEs and real estate, our Sharia DJIM China 800 are skewed towards what we call the new economic sectors with high exposures in the green and renewable companies, as well as tech stocks, healthcare stock, and the consumption sector as well. So when it comes to the green and renewables, I think if you look at the top 10 constituent for the Dow Jones Islamic Market China 800, the largest constituent is the CATL, Contemporary Amperex Technology Company, which is basically the largest EV battery makers in the world. And if you look at the second largest company, the China Yangtze Power, although it is a utility company, it is basically the largest hydropower company in the world. And again, BYD is they also manufactures EV batteries, but they also manufactures EV cars as well. And yeah, and then the number 4 companies, the LONGi Green Energy Technology, is basically the largest solar panel manufacturers in the world. So from this, you can see that this top 10, or even this the sector composition of DJIM China 800 actually skewed towards the new economic drivers of China, especially in the coming decade lah. So now we back to on how ETF can be used by any individual investors lah. So how do you build your own portfolio using an ETF? So definitely there's a various approach to add ETF in your portfolio. And the first one is basically diversification through a single ETF. Like I said earlier, ETF consists of a portfolio of a different company. So when you are buying an ETF, you basically get the market exposure. Hence, you achieve the diversification benefits through a single ETF. So take for example here, the VPDJ Sharia China A-Shares 100 ETF, where the ETF itself consists of 100 constituents. So with diverse sector exposure that's skewed towards the China new economic sector. So investing in such ETF will provide investor with direct and immediate market exposure to the underlying index. So if you really believe in the Chinese new economic drivers, then definitely our VPDJ Sharia China A-Shares 100 ETF is the one that you should be, have your eyes on lah. At the same time, investors can also combine ETF with domestic single stock portfolio. So I'm probably sure that most of you or most of retail investors are very much invested in the local stocks. So by incorporating the ETF, investors will then be able to diversify away from the single country risk or exposure and home market risk due to the operational ease from ringgit denominated foreign underlying asset offered by these ETF that are listed in Malaysia. So if you have like a Malaysia single stock portfolio, then you buy probably ETF on China, then definitely you can get both the exposure, not just Malaysia, but also exposure on China just by trading on Bursa itself. And I think last but not least is basically if you think you are up for it, you think you want to be more creative, you can also create a global ETF portfolios by by combining the different ETF with foreign underlying assets using all the ETF available on Bursa. At the same time, you can also incorporate your own view of the market by making some tactical adjustment on the asset allocation. So, for example, if you think that US market has peaked, you might want to reduce your allocation to the US and increase your allocation to other markets, probably like Malaysia or China. Then that's how you actually manage your own global ETF portfolio. So in terms of accessing the ETF, access to information regarding ETF are available on aggregate level on the Bursa marketplace. Alternatively, investors can also go to individual ETF issuer website to get more detailed information regarding any particular ETF issued by the issuer. In regards to the trading platform, investors can opt for direct approach where you can actually instruct your broker or execute trades via online trading platforms. Or you can also invest in the ETF via robo-advisory platforms, which allocates your capital to different type of ETF based on your investment preference and risk profile. So here are probably just a checklist to actually help you to determine what kind of strategy, what kind of investment tool that you want to have. So if you don't really have a CDS account, if you wish to open a CDS account, you can open your account with the brokers such as M Equities. But if you think, you're not up for it, you can actually invest, through the digital investment manager. But if you have the CDS account, if you prefer to do it yourself, you can actually buy the ETF either on Bursa, or if you have the required capital, you can actually go into the primary market by contacting the participating dealer. So earlier when I talked about ETF transparency, this is what I mean by it. So for our ETF, you can see that the whole list of 100 companies are shown in our website. Together with the name of the company, the industries of the company, as well as the individual weightings of each of these companies, as well as you can see on in aggregate basis the sector composition of the ETF. So this actually help you to actually understand what you are buying into lah. And I think last but not least, the Bursa Malaysia ETF cashback program is back. So do take this opportunity to be part of it and get rewarded with it. So I think that's all from me, and over to you, Jeff.
Thank you, Mr. Kamal. Yeah, for your knowledge, Mr. Kamal just recovered from the COVID-19. So I wish you well. Hopefully, we'll get well soon.
Yeah, thank you, Jeff. It's been a while since the last time I spoke in full length, so I think that's why I've been having a bit of sore throat and coughing. So sorry about that, guys.
No worries, no worries. Hey guys, so any question for Mr. Kamal? Anything that you can type in the chat box? Any questions? Actually, Mr. Kamal, for a start, I have some question for you. So I saw your slide, one of the slide that mentioned about passive ETF. What is the passive ETF? Is there any active ETF? What is the difference?
Okay. Okay, I can't remember which slide was it. Okay. So basically, generally, I think there's a large chunk of ETF that is passively managed, meaning that it tracks the benchmark. So it doesn't really added any like active bets on it lah. So if the benchmark says buy 10% of public, then you buy 10% of public bank. So when it comes to, but I think due to the innovation in the ETF space alone, I mean, we can see that there is also an active ETF being launched. But not in Malaysia lah. But you can see it in the US and I think globally. I think last year, or last 2 years was I mean when COVID hits, I think one of the most famous actively managed ETF is the ARK ETF. By Cathie Wood, I think that gained quite prominence. I think in the mid 2020 to the mid 2021. So definitely there is an active ETF, but I think when we talk about ETF generally, especially in Malaysia, it is a passively managed ETF lah, meaning that we don't really do any active bets on the ETF portfolio.
Means it wouldn't change, like this month change, then next one change again.
No, we will actually follow what the benchmark is saying. So normally for our ETF itself, it is a rebalance every quarter. So we actually do that lah. We rebalance every quarter following the index. So when I mean in trying to understand, I mean what's the difference between the passively managed and the actively managed ETF, you can actually look at the tracking error. So for a passively managed ETF, the tracking error should be very minimal. Usually in Malaysia case, usually somewhat is 1% and below lah. So if you call yourself a passively managed ETF, but the tracking error is about 3 to 5%, then I mean it's showing there's something wrong lah. Yeah.
Okay. I have a question from Wong. How do we choose the best ETF? What the criteria do we check on?
Again, I mean, it depends on how you view the markets. Again, you have about 19 ETF to pick and choose from, especially in Bursa. So on how you actually view or how your outlook is on this. I mean, okay, let's take for example, we have the Malaysia ETF, we have the US ETF, and we have the China ETF. So your view on all these three markets will actually determine your next steps. So if you're really bullish on the US, so that means you put higher weightage or you invest quite a lot in the US ETF. But again, when it comes to diversification, you would want to diversify your geographic exposure as well. So you also want to have a bit of Malaysia and the China as well. But again, it depends on how you view the market.
Thank you, Mr. Kamal. Yong, can share Mr. Kamal contact. I think Mr. Kamal, will you able to share your company email so they can ask some question about your ETF?
Yeah, sorry, let me scroll to the sorry. Sorry, let me. Yeah. So if you have any inquiry, please do contact the email vpmy-enquiry@valuepartners-group.com. It's quite lengthy there, so I'll just put it here for a while for you guys to actually like copy it lah. But otherwise you can actually like connect with me via LinkedIn. I'm happy to actually talk or discuss with you. I mean, on a separate session if there's any questions. Yeah.
Awesome. For your answer, Sam and Chia, we will have a recorded session will be shared to after this event. So if you do not get the link for this access of the recording, please email to us. I'm writing the email here. After 48 hours, which means we need some time to upload it to the YouTube lah. So we will email to all of you by Wednesday. Okay, I hope you answer your question. Then WK, does investing in foreign ETF have currency risk too?
Yeah. So I think when it comes to foreign ETF, yes, definitely there is a currency risk. I think for most of the ETF listed in Malaysia that has the foreign underlying asset, the ETF issuer doesn't take a hedge on the currency itself. So basically they leave it kind of naked lah. So basically any movement in the currency do affect the performance of the ETF index. Yeah, that's all.
Okay, one of the questions from Yong again, where to get the performance of the 19 ETFs in Malaysia?
I think you can go to the Bursa Marketplace to actually look. I think Bursa Marketplace has that information in terms of the performance of the individual ETF. But at the same time, I think you can go to each individual ETF issuer's website to actually probably look at their monthly fact sheets. Normally, the performance recorded in the monthly fact sheet or even the semi-annual report as well as the annual reports.
A question from the PLI. Any possibility for new ETFs from being launched, possibly focus on the Australia and India?
Yeah, I think when it comes to the possibility of new launch, definitely that is there. But again, it depends on the, it's like a catch-22 lah. I mean, for us ETF issuer, we need to see the demand to ensure that the ETF can be sustained going forward. Because I think for ETF, it is not a very lucrative business. I mean, you can see that even in terms of the management fee is very low. So definitely you need to have a bigger scale, bigger size for an ETF to be sustained. To be sustainable. So definitely we need to see demand for that particular market before deciding on to go into or to launch a new ETF.
All right. To answer me question, do we have to provide the email for the slide? We will email to you the recording of this session by Wednesday. If you do not receive it, please email to us, the Marketing and Equities, which I already posted on the chat. So next question is from Mr. Kama is, how frequent we need to change the ETF portfolio by looking at the cyclical theme stock?
So I think this is not just for ETF portfolio. It's I think for your own any kind of investors portfolio. When it comes to managing your portfolio, you need to have like discipline in like in reviewing your portfolio on a frequent basis. But not too frequent that it actually added to your portfolio turnover, which essentially implying that there will be higher costs in reviewing your portfolio. So I think probably looking at a month or even a quarterly basis, you actually review your portfolio is probably somewhat manageable. But at the same time, you need to be mindful that sometimes you need to be more to have a more tactical approach, like you see when I think in the past few weeks when the Russia actually invaded Ukraine, so I mean the whole market is kind of haywire, so that probably should trigger you to actually review your portfolio as well. So I mean, apart from the normal frequent reviewing, probably a month or every month or every quarter, you should also have this tactical view, depending on the market conditions.
Okay, thank you, Mr. Kamal. Kai, I hope this answered your question. Okay, next is Wong. Question is, when we invest in ETF, do we own the company stock too?
All right. So when we talk about the plain vanilla ETF like ours, so it is a physical ETF. We do not use any synthetic, exposure. So when you actually buy into the ETF actually invest in all the 100 companies. So essentially, what you're saying is right. You own the company stock as well, but it is at a very small fraction lah. Yeah.
Okay, guys, we only have another 2 minutes to go. Any more questions from you guys? Take care, Mr. Kamal.
Yeah, thank you. No worries.
Okay, one last question from me, Mr. Kamal. What will be the investment window time frame for the ETF? Means that how long I should invest on the ETF in order to see some return?
Okay, I think when it comes to ETF, again, like I said, if you are buying an ETF, you are essentially buying into the market. So when you buy into the market, your views should be at least in the medium to long term lah. So it should not be like today. You cannot be like a scalp trader lah. When it comes to investing in an ETF, you should have a long term view of it lah.
Shall I say it's 3 to 5 years at least?
Yeah. 3 to 5 years. I think it's quite reasonable. But again, you should review your portfolios on a frequent basis. So that means you should actually incorporate your own views or your outlook on the market just by changing the weights of the ETF you invested in lah. Yeah.
Awesome. I don't see any other question from the floor. So, all right. Thank you everyone for this session. So thanks, Mr. Kamal and the Value Partners, sharing your valuable knowledge with the audience. We shall carry on the next session where our dealer, Mr. Anthony Kedrick, who will be the presenter for the next topic, familiarized with the online trading platform. Again, thank you, Mr. Kamal. Thank you, Value Partners. The mic is yours, Ms. Anthony. Anthony, you're muted.
Hello, Jeff.
Okay, can hear you.
Okay. Apology for earlier. All right. Very good morning. I'm Anthony from Kuching, dealer from Kuching. So today I would like to share on the online trading for M4M equities. So without further ado, let's start our tour to our website. Okay, this will be mequities.com.my, basic introduction. So this is basically our trading platform, right? So this is all the toolbars available, market summary, layouts, and the quote screen. Okay, and this stock, you can sort like this. You can select to several sectors and subsectors. As per our earlier topic, we were talking about ETF. This we can select specifically on ETF, right? You select all. Okay, you can see all the ETF here, right? For trading, okay, let's go straight to trade. You can either double click, okay, or okay, you can either right click and select here, right? Okay, next we proceed to watch list, right? A few here, recent quote, view watch list, which has been created. This is my watch list. And first, a guide how to create watch list. Okay, name, POR. Okay, how to add counters to watch list. Click here, plus. For example, we choose gold ETF. Okay, add. China ETF. Add. Okay, next, we view watch list. Which one? Favor. It's here, right? So if you want to delete, also here, click here. Like here, remove stock from watch list. Yes. Okay. You can also rename watch list. And also delete watch list. Okay. Next, we proceed to settings. Settings available, layout. You can select kind of layout that you want to go for. Okay, either, and the other one is this layout is mostly is applicable for the pop-ups. Okay, for pop-up, what I meant is here, it will look like this. Pop up, and you can arrange it like this. Okay, based on your preference, what do you want to watch or monitor at the same time, or like this. Okay, sorry, because I've stated earlier, charts are not available today. Okay, so back to layout one, back to settings. Okay, these are preset set list lah. Okay, where if you select pop up, okay, it will look like this. Okay, so for the path, for example, if you choose select any function, watch list, view watch list, suka, it will come out like this, pop up. Okay. You select tab, okay, it will come out like this. As tab. This tab is suitable for those that prefer bigger screens, better view. And next we go to stock info. Stock info, we have market depth and okay, market depth and also depth metrics. Okay, for depth metric combination of market depth. The beauty here is you can select any counter instead of staying with this, the preset market depth. You can select counter that you wish to monitor. For example, I select 1925, 5099. Okay. Or here also can. Fox and Lee. CMSB. Okay. So this is depth metrics. Right. For stock info, historical data, look like this. I've set it here. Okay, stock info, basically you have info, the name, right? Volume, everything. These are the info available under stock info, right? Time and sales, business done, price distribution, and chart. Okay, so apologies again. I can't share chart. I think chart is not available. Okay, and for dev metrics, and also combine the historical data. Right, historical data, you can drag until 500 records. You can either select for daily or 30 minutes, for example, up till 1 minute as well. Okay. Next, we proceed to charts. Okay, we have intraday charts and also analysis chart. Okay, I've put it here, the layout tree. Okay, but yeah, I can't display charts today for both intraday for one market day only at the current market day. Analysis chart, you can drag until 500. Okay, even monthly, daily, or weekly. And we have few tools, chart tools as well available on top. My apologies again for this. Can't display the chart this morning. And buy and sell, we go to this later. News available from Bursa and also Nikkei. Fundamentals, let's go back here. Basically, fundamentals, what are available info in fundamental are trailing returns, financial valuation, operational performance, dividends, ownership, and those executives. Okay, so those are the things available in the fundamentals. And analysis, you have dividends and warrants. Okay, also coming out, right? And also order book. Okay, order book. Okay, let's go to order. For example, public bank. There are a few ways to order. You can either double click at the counter, right? Double click at the counter. You put your normally trading limit here, your account number, your trading account number, your name, stock name, action, buy or sell, order type, okay, quantity times 100. If you select lot under setting earlier, okay, and price and also validity. Right, this one I would like to explain further. Validity by default is your order will be valid for one market day. Okay, one market day, and if you want your order validity more than one market day, you can choose this. Right, you can select which date your order to be valid until. Maximum 30 days, but make sure not to select public holiday or weekends. Okay, you'll be rejected. So select market day. Let me see. Select 2 days 19. Select Monday 18. Okay, that means your order will be valid, will be active until next month, until 18th of April. Okay, but if it's matched sometime in the middle, it will be matched. Okay. Likewise, some other method for quotes. Order also you can press here. So can be done like this. Also here or double click. So those are 3 ways you can execute order or buy and sell. Okay, besides that, order book, you can view your order status. Okay, what are your queues, whether they're on queue, they are matched, they're partially matched, or they're rejected. Okay, you can also either revise or cancel the order. Okay, this is one way, or the faster way. Okay, if you know you queue public bank earlier, okay, highlight here, right click, you have revise and cancel option here. Okay, order book again, for order history. Okay, order history, if you want to see your order, your past order. Okay, you can select the date, from, until. Okay, that's for order book. And order log, you can watch further deeper details for your order. Okay, you can look at the counter broker, okay, action buy, and also you place the order through apps or through web. Okay, quantity price, this is standard info. And for reports, client summary, for client summary is for you to view the outstanding, what are your available cash balance, okay, your outstanding purchases or incoming sales proceed. Okay, that's for client summary. Okay, this one is for those who have margin account summary, margin portfolio valuation, and transaction movement. Okay, for transaction movement, you can select up to 3 months. Okay, your transaction, your transaction history up till 3 months, right? And stock balances. Okay, for that you have to read through authorization and agree, and only you can view this. Right. For portfolio, okay, so this equities portfolio. Okay, what are your holdings? Okay, what are your holdings for equity portfolio? For realized gain and loss, this is only, okay, roughly you want to see how much you realized gain and loss after you sell your holdings. Okay, but just take note that it's not really 100% accurate because of the brokerage. Okay, because brokerage is a standard stat here. Okay, so brokerage for certain account might be different. And here, back to setting again, we will here until UI. You can set dark lot here and font and hotkeys as well. Right. Here, okay, let's look at the layouts. Okay, this is the layout one that I select tab. Okay, if you select pop up, it will look like this. Okay, this I shared some example how you can stack the pop-ups. Okay, quote screen, depth metric, historical, and stock info tracker on the same screen. And okay, quote screen, intraday chart and analysis chart on the same screen. Okay, portfolio and also order book. Okay, on the same screen is very helpful. Okay, and then after you set all this layout, please save. Right. Okay, here, back here, you sort the subsectors, select volume, and here. Okay, please take note, this is by default normal bot lot. And if you wish to sell or to trade in other lot, normal out lot, for example, you select here. Right? And the order box will be different as well. ×1. Okay. Okay, for research. Okay, research here, equity research and Bursa Malaysia archive. Available in 2. Equity research, this also available on the home page. Okay, I'll share with you later. The home page. This might take time. And also available for Bursa Malaysia Archive. Okay, next for e-services. Okay, e-services, we have e-settlement and settlement status. Okay, this e-settlement, that means you can settle whatever outstanding purchases, okay, on net control loss or miscellaneous debit interest to here. Okay, select pay here. So if you have an mBank account, okay, once you select pay, it will redirect you to mBank website. So then you log in your M Online. Okay, from there, and same goes with this settlement status. E-deposit also can be done here. Also, you must have mBank Online. Okay, online cash deposit. Okay, yeah, because okay, this is for demo account. Normally they have your account number, your name here, and your online cash deposit. And again, it will redirect you to M Online. Okay, you log in the M Online from there. E-forms, this is for withdrawal. Okay, e-forms, services.
Hi, Anthony. Sorry for short interruption.
Okay,
There's a question from the floor is,
okay,
please explain and show how to read the market depth from
okay.
Lee Kai-Teng, and also Mr. Ko, how to get the daily, hourly RSI.
Okay.
Seems like the market closed, the website also closed.
Yeah. Oh, because of actually the charting, I want to share the charts, but can't share the chart. Oh, you mean for the market depth? Okay, how to read the market depth, Jeff? The question earlier.
Correct. Hi, while waiting for the things to load, after the event, everyone, please, if possible, do some market survey for us. I already post our link. Your feedback is very important to us. So please take some time. It's like more or less 5 minutes times. Please help us to fill up the survey form. Thank you, everyone. Hi everyone, while waiting, right? If you all do not know, we have a Telegram channel for customer only. I'm posting it to the chat box. So please join the Telegram. So we every day we will post our research report that is for the client only. So please join in, and any marketing event we also will post there. Okay, here you go.
Okay, Jeff, give me 5 minutes, 2 minutes. I try to restart everything first. I can't seem to go into the website. Okay.
While we're waiting, I would like to share with you, we have an International Women's Day campaign. Whoever, any of your friend, girlfriend, your wife wish to open an account right now, you can open with the free CDS account waiver for the 10 ringgit will be waived. Whoever open account with us. Then also there's a chance to win the pamphlet voucher, 120 ringgit pamphlet voucher for you for the new account opening. So from there, you only need to generate 50 ringgit brokerage fees before 30th May, 31st May. So if you have your any woman friends would like to open account with us, please do share with them.
Okay, for the first question earlier, okay, how to view the market depth, huh? Okay, you can go through the stock info. Okay, stock info, you can select the market depth. Okay, stock info, market depth, and second the RSI is through the tracker, also via the stock info actually.
Your screen still loading.
Yeah. Okay. Okay, the question of market depth. Okay, so this is the market depth. Jeff asking, these are the market depth. Okay, I think this one too many things. Okay, market depth. This is a combination of a 9 market depth. Okay, you can select how many rows and columns to maximize the view, or how many market depth you want to view. Okay, and bid, buyers, buyer price, and quantity available for the particular buyer. Okay, if that's the question, and whatever quantity here, you need to times 100. So that's the exact quantity. Likewise, seller, 56 cent seller, for example, 170,897,00 at the back, because everything is quoted in lots. One lot is 100 units. So these are available buyer at this price. Okay, and these are available seller at this side. So if you buyer wish to sell, they can look at this price. Okay, if they want to sell higher than this price, that means they can queue and join the seller at this side. Okay, and it will be on queue. Okay, likewise for seller, for buyer, if you want to buy, and look at this seller and with available quantity. And if they want to buy lower than these available sellers, they can join this queue or even lower. Okay, here we can view up till up till 5 depth, but by default only 3 available. Okay, next question, Jeff. Second question just now.
The second question is how to get the daily and hourly RSI.
Daily and hourly RSI. Okay. Available here. See, let's wait for the chart. Actually, there should be a chart here. Okay, there should be a chart here. There'll be tools, chart tools here. You can select what do you wish to view or watch. Basically, it's available in Stock Info Tracker and also intraday chart. Okay, you can adjust whether you want to view it hourly, by half hourly, and then select the chart tools on top here. But unfortunately, we can't view charts this morning because I tried earlier, even intraday chart and analysis chart. But you can view on top here by the tools here and select the duration. Okay, for the chart available by here, intraday chart or Stock Info Tracker. There's also a chart there. So can proceed to next question while waiting for the chart to load. In case, okay.
A question for Patrick is, I don't have an mBank account. How to transfer money from NInvest and how fast
Okay.
money deposit from mBank
Okay.
versus other bank?
Okay, at home screen, okay, you can, there's a few bank account numbers available for you to bank in. Okay, here. Under products. Under products, there's deposit of fund here. There are steps to deposit of fund, and then there are few bank account numbers: mBank, Maybank, CIMB, Public Bank, and Hong Leong. Okay, client can do online transfers to either one of those accounts. Okay, via Do It Now. Okay, or instant transfer via instant transfer, and then the receipt to be forwarded to the respective dealers or remisers.
I have other question coming in.
Okay.
From Mr. Nasruddin. Can I trade US market and what is the charges per buy sell trade?
Okay, you can trade US. Okay, US, we have US available offline and online. Okay, for online, it's available also by a CQ Market. Okay, it's another platform. You have to create the ID and password for that. And the rates available on our website as well under FIS. Okay, Foreign Investing Services. Yes, I'm still trying to go into the web again to show you where are the available rates for foreign trading for US market. So far, our foreign investing services available online for US and Singapore. The rest are still offline.
For more clarification, Mr. Nasruddin, you may call your dealer to open the FIS account before you're able to trade the US market.
Okay, so this info are available on the homepage. Okay, homepage under products, equities, equity trading, and also under financial foreign investing services. Okay. All right, you're back here. Products. And I will show you the earlier question, which was on the bank account numbers for client to deposit for the, okay. For the earlier question, what are the equities and derivative? Okay, these are the rates. Fee schedule, offline and online.
Sorry, Suresh. Apology for the internet speed. Yes, we are back in 1990s.
Okay, these are the rates for offline versus online. So this is online rate for US. Buy and sell 0.35%, minimum USD 25, and offline also as well. No amalgamation. Okay, to versus offline trades. Okay, for FIS. Okay, our web also available on apps. Recently, we've just launched our new app, M Equities Mobile. Okay, you can with more better view, more features. Okay. Any questions? Any other question? For further guide of basic on M Equities, you can click on education. Sincere apology on my connection, everyone. Because under education, you can find the list of bank account numbers. Okay, equities trading, user guide. You can go to user guide. List of bank account numbers is under user guide. Okay, use under user guide with the bank account numbers as I've mentioned earlier. M-Bank, Maybank, Public Bank, Hong Leong, under the name of M Investment Bank Berhad. Okay, you can either do online transfer to either one of those accounts. Okay, and forward the receipt to your respective dealers and advisor for processing. Okay. Okay, for help desk, the number available here. So any other question from the floor, Jeff?
I think it's good for now. You may continue the presentation.
Okay. Very sorry. Okay, these are the bank account numbers that I mentioned earlier. Okay, go to quick user guide. And then here, to click interactive demo for TC Plus, video demo how to go around with the M equities, and list of bank account numbers, like Bank, Maybank, Public Bank, Hong Leong, RHB, CIMB. Okay. So these are the bank account numbers for you to bank in if you don't have a bank account and can use the e-settlement features. Right. So let's go back to the trading platform. Okay, so basically the trading platform, early question asking, can we trade the US stock? You can go here, trading hall, FIS. Okay, but from here, you need to log in again to another page, different set of password and user ID. So once you sign up for your FIS, okay, and CQ market, and then you will have, you'll be provided with a password and login ID, and then change your preference for your access for foreign market trading. Okay, which is available at the moment for US market and Singapore. The rest you can still call, the rest is still offline. Okay, need to call, place order manually via offline. And then I guess I've gone through all these toolbars and also this layout as well. Okay, so far any other question? Basically, that's all from me on the basic tour on our M Equities web. And again, my sincere apology on my coverage here. Any question from the floor?
Yeah, a new one. Would the US market be real time? What I think the question is about the market price for the US. Is this a real time?
It's delay. Okay, it's not real time, about 15 to 20 market delay our CQ market. It's not really, it's not real time. It's delay about 15 minutes, roughly about 15 minutes for our CQ market platform. Jeff.
Thank you, Anthony.
So back to my slides. So we've covered this, e-settlement, e-deposits, research, and this is the contact number for e-broking help desk for sales related, for opening account. I can email this. Okay. And in case for those who have opened account, haven't signed up, okay, I wish to guide through how to sign up online. Need to log out first. I wish me luck on my line so that I can demo how to sign up M Equities. Okay, even if you haven't got any trading account with us, you can still sign up for M Equities for a free trial. Okay, good. We're here. Open account. Okay, open account. Go to individual online registration. Read through the terms and condition, and I agree. You have two options. Either I'm existing. Under I'm existing, you have to key in your trading account numbers. Right? If you are new, haven't got any trading account with us, I'm not existing. Okay. Okay. Required details. Continue. You will need to create user ID, password, and PIN. Right? Then submit. And then you go back to your email address, which we have stated here, to verify your application. Okay, easy as that. And this is on the sign up on MM Equities online. Okay. Okay, thank you. So any more question? I will still try go into the chart, back to the earlier question on the RSI.
Okay, a new question from Suresh coming in. Can we use the demo account for the paper trade?
Demo account. A demo account only for tour.
I think what Mr. Suresh means is, is it possible to use the demo account to put a paper, put a trade inside, which is the not the real one? Means is there any way that have a demo portfolio for the stock?
Or demo account is only like this, like what I have here. Only a function that for you to walk about in the web. There's no mock trade or mock portfolio for it available at the moment. Only when you available for just to have a look at the features, that's all, but not available for trade, yes, Mr. Suresh, at the moment. Yeah, like what I have here is a sample of demo account. Okay, you can just look around for the features, but you can't trade. The account is not active. And no trading limit as well. Okay, I hope that answers the question.
Any other question from the floor? Okay, I see no more questions from the floor. Is anything you need to add on, Anthony?
Okay, okay, I see some hope here. Okay, for the chat lah. Okay, Jeff, give me 2 minutes. Okay, I see some hope here. Aduh. So these are the toolbar here. Okay, sorry, it's still blur. Okay, these are the charts toolbar. A question asked by one of our clients earlier. Okay, the functions and the type of charts you can add into the charts, right? And you can also save it into a template, and also how many days. This is what I meant earlier. Okay.
Apology everyone for the connection problem. Usually for Saturday, the connection will be good because it's the market close day.
Because tested earlier, everything was okay. Yeah. Basically, that's it, because I don't think it will load anymore. So this is the toolbar. Okay, the chart tools that I referred earlier, the chart that I referred earlier about the, okay, and also the duration, 100 days until 500. You can customize the chart and customize the view, the info that you wish to look at. Okay, so I'm very sorry, sir. I think that's the best I can answer at the moment. Okay, Jeff.
Yeah, sorry everyone, because this the thing is we are using our company VPN internet connection, so I think it's the problem is from the our company internet connection. The problem is not the platform problem, because if I use our own personal laptop, it's display quite good, quite fast.
Yeah, it's a VPN connection, Jeff. I'm using the company VPN connection.
Are you still facing a same problem?
Yeah. Still loading, Jeff, for the intraday chart.
I think, Anthony, you have to reshare your screen. Anthony,
Yeah.
can you reshare your screen? Is it still loading?
Yes, still loading.
Hi, Anthony.
Yeah, Jeff, still here.
Why not I'm sharing my laptop screen. You try to log in via my laptop. I'm sharing now. Okay, can you see the screen?
Yes.
Is it possible that you request for the control? Please request for the control. Then you try to log in. Okay, you are allowed. Okay, you can control the screen already. Sorry everyone for the connection problem.
Okay.
Finally.
Okay, these are the two charts, okay, from the analysis chart I would like to share earlier. All right, intraday and analysis chart. Okay, analysis chart, you can drag until 500. Okay, 500 records. And likewise here, intraday, let's focus on intraday. Okay. Here, for example, 80. Okay, these are the toolbar that I mentioned earlier, right? Select here. Here. Okay, type of chart they would like to include. Okay, indicators as well. And also, yeah. Okay, so there are many tools available here for the charts. Okay, likewise, intraday also analysis chart. Okay, back to here just now. The one we cannot access earlier is fundamentals. Okay, this is the one that we can't access earlier. Okay, Maybank, example, fundamentals.
Anthony, new question coming in
Okay.
is how do I see 1 year chart and the helicopter view?
1 year chart. 1 year chart you can view from here. Analysis. Okay, analysis as the place. Let me go here again. Analysis. basically it's under analysis chart. Okay, you can select either weekly, monthly, or yearly. Okay, it's on available on analysis chart. I think this the response also slow, Jeff. Hello.
Which screen you want it to be open?
Chart analysis.
All right, done.
Yep. And select this 1 day. Okay. Normally you will scroll down. This is okay. Year. Okay. Okay, wait one moment. This is it. Year. And for the view is here. Okay. So it takes time for, okay, this is a year chart. Okay, this is a year chart. And for the view selection is here. Right. I hope that answers the question for the analysis chart.
All right, everyone. Apology again for the connection problem. I think it will be too late for now for to continue because of the internet connection is quite bad. We apologize for that. I think we should end the session now. Anything you want to add, Anthony?
Okay. First, for me, it's sincere apology for the internet connection. Right. So I tried my best. I hope all the questions asked just now have been clearly answered. For further details, you can contact us via the email that I've shown earlier from the.
All right, all right.
All right. All right.
Yeah,
So,
thank you,
okay.
Anthony, for the
Thank you.
presentation. Also, thanks to you all who stay with us and stay with us until the end. I hope that this webinar is helpful for you. And again, apology for the internet connection. We shall end this session now, and I wish you all the best and stay safe. Thank you, everyone.
Kita kena anak Jeff.